Thank you for having me. I really appreciate the opportunity to come speak to you tonight, and I hope we can all get something out of this presentation. Before we begin, so a brief introduction about myself. I'm a real estate and corporate attorney at Meyer Capel. I graduated from the University of Champaign, Urbana College of Law in 2022. And during my time during law school, I worked in-house at a Chicago-based fintech company and also worked for the Illinois Department of Financial and Professional Regulation. I also graduated from the University of Wisconsin-Madison with a BA in philosophy in 2019. And there's a nice little picture of me with my girlfriend from graduation last year. If it's just the two of us, I introduce.
They're recording.
That's okay. All right, yep. Fair enough. All right, the agenda for tonight's presentation, I'm going to do a brief overview of the common business entities. Then we're going to discuss considerations when it comes to choosing a business entity. And we're going to explore entity types, sole proprietorships, LLCs, corporations, partnerships. Have an overview of procedures for formation and operation after it does get filed and you get your business set up. And then we'll also look at general tax considerations and have a brief Q&A period at the end of this. It's my goal to have this be a little interactive, so if the audience has any questions, please just shout them out and we'll get to them as we get there. All right, overview of the common entity types. Obviously, sole proprietorship, that's kind of the end-all, be-all. It's just you as an individual running your business. Next up, a little bit more complicated, a little more flexibility. We have a limited liability company. And these are kind of broken down. You have a standard general LLC. You can do a series LLC. And then there's also professional services LLCs as well, which just have different filing requirements. Then you have corporations. You have C Corps, which is short for closed corporations. There's restrictions on membership and transfer of stock and stuff like that. There's also professional services corporations, Meyer Capel, PC, Professional Service Corporation, they're out there. And last but not least, we have partnerships. These include general, limited liability. A little less common than sole proprietorships, LLCs, and corporations, but depending on your business and what you want to start, could be an option for you. All right, so for considerations for choosing a business entity, there's four main categories usually. One is control. And this really comes down to who's managing the day-to-day of the operation, who do you want making the end-all be-all decisions, and how much oversight you want on the individual who's going to be making those decisions. Sometimes sole proprietorships, for example, you're the individual, buck stops with you. LLCs, you can have the same thing, but you can also have something where there's a lot of oversight, where there's a manager for the LLC and all the members have to sign off on their actions. You can also do something where the manager handles the day-to-day, but you have a set threshold for when the members need to sign off and provide some oversight on an important business decision, such as getting a loan, adding new members, or just changing the LLC at all. Another important consideration is taxes. There's simplicity with taxes, 1040. We're all file them every year, well aware of those. But then there's also things like the 255-3. There's K1s, and just depending on the extent you want a simple tax return at the end of the year and the optimal tax return at the end of the year is something you have to weigh when you're considering what business entity you want to form. Another final consideration is usually complexity, setting up and operationally. When you set up LLC, there's certain filing requirements, certain state and federal level, and generally corporations, LLC, a little bit more than the sole proprietorship, where sole proprietorship, you can wake up one morning, say you want to start a business, and that's it. You're good to go. LLC corporations, a couple more loopholes, a couple more hurdles to jump through, and that's important to weigh when you're setting up your business. So the way I normally approach with clients is 8 simple questions just to start us off. How much control do you wish to have personally or the owner of the business? How will you protect your personal assets? The one big disadvantage for sole proprietorship is that you are personally liable for anything that happens. If you set up a restaurant or something and someone trips and falls and the customer sues you, you could be on the hook for millions of dollars in damages. That's something you definitely want to consider when you're setting up your business. How much risk is your business willing to absorb? Again, as we mentioned, the sole proprietorship, it's you as the individual on the line. If you set up a corporation, it's the business on the line. And how you want to distribute the risk among individuals in the business is something you should consider. Another thing is, how do you want to be taxed? Do you want to be filling out 4 tax forms at the end of the year on top of your personal taxes as well? No one likes paying taxes to the IRS. We all do it. And how you want to be taxed and to what extent you want to go hire a CPA is something you want to consider when setting up your business. Will you need to access business earnings for personal reasons? Again, sole proprietorship, you are the business. The business's income is your own income. You can access it pretty freely. With a corporation, though, you're getting stock dividends, buying. It's all dependent on the board of directors and what the corporation itself wants to do. So if you're setting up a business to generate income, provide a living for yourself, that's going to influence which business entity you set up. And then which legal structure will provide you with the most flexibility? A sole proprietorship is relatively flexible. Later down the line, there are things that kind of limit what you can do. Flexibility in the short term, but long term, it does kind of tie you up. Corporation, you have bylaws you need to follow, shareholder agreements. It gets very complex, and there is flexibility at points, but generally there's going to be more restrictions there in what you can do and what you need shareholder approval or membership approval. Greatly influences the kind of entity you want to set up. And then what will happen to the business if you experience an unexpected hardship or are unable to continue to run the company? Corporations, very easy to get a new director, new CEO, stuff like that. You can still have your membership, your shares in the company. You can still profit from what the business is doing, and you can take a step back. Sole proprietorship, if you go down, if you're incapacitated for whatever reason, business stops with you. So again, important to consider on what your long-term goals are and what might happen in the unexpected. All right, with that, we're going to jump into the sole proprietorship. So advantages of the sole proprietorship, it's simple, the least expensive business structure to organize. Not a whole lot of filing requirements for the state or county. Generally, you might have to register the business. If you're going to do a different name than your own, if I wanted to set up Ryan Michelson's bar lemonade stand, I can go out there and do it right now, no problem. If I wanted to get a different name, that's going to require filing with the state, registration, but more or less, it's a one-page document, pretty simple and pretty cheap to do. Anybody can do it. Gives you complete control over all decisions regarding the business. Again, you are the be-all, end-all when it comes to decision making. You don't have to worry about any employees, anybody else coming over your head, fighting you on the decision. You are the sole actor. You also receive all the profits generated from the business. There's no one else you're splitting the profits with. You get the paycheck at the end of the day, depending on how successful it is. And in the case where it's not successful, you're responsible for all the losses as well. That is something else you have to consider. It's an advantage and also a disadvantage. And then reports profits or loss on the personal income tax return. Again, that's very simple. You have your 1040 at the end of the year. Whatever the business made, whatever the business lost, that's on you. It's very simple to do come tax time. Disadvantages, if operating the business under a name, like I said, there are some requirements there for filing with the state. It's a small hurdle, all things considered. So if you really want to set up a sole proprietorship, don't let the $50 and getting assumed name stop you from doing so. The law does not distinguish between the business and its owner. Like I said previously, someone trips and falls, breaks something in your business, and they get a good settlement, good court ruling, yeah, you're liable for all of that. So if the business assets don't cover it, they can go after your home, possibly your car, your personal assets, and that's going to be a bad day. Sole proprietorship, I have unlimited liability for their business. Like I was saying, all the assets are at risk, and it's just something very scary to think about, especially when we compare it to different types of business entities later. You can get much of the same advantages of a sole proprietorship with an LLC. So it's, again, depending on your risk tolerance level, the liability is a big disadvantage. Also, the business may dissolve if you withdraw or if you pass away. It really isn't a generational wealth-producing entity for your family, if that's what you want to set up a business for. Generally, if you pass, the business dies as well. So again, if you're thinking long-term, longevity for the business, want to set something up for future generations, sole proprietorship probably isn't the way you want to do things. Limited liability companies. Advantages, you have limited liability protection, as the name suggests. Unlike the sole proprietorship, the LLC, if someone falls, sues you, it's the business who's going to be in court, not you. You might be representing the business, you might be in there in your capacity as a manager, but they're not coming after your assets, and anything you own personally is going to be protected. Can report profits and losses on a personal income return. This kind of depends a little bit on how many members you have and some of the other formation decisions you make, but generally it's not taxed at the entity level, so everything passes through to you, and you just have, I think it's like K1 is the form. It's where you report any distributions that the LLC gives you, and a little extra step come tax time, but not too bad considering things like corporations and such. And then again, typically less paperwork than a corporation. I'll talk about this more later, but corporations have certain requirements for operations. They need to have annual shareholder meetings, annual directors meetings, board meetings, elections. LLC, it's more like you can decide how to operate it as you want. It's one of the most flexible business entities out there. Disadvantages, cost of state filings. You need to file articles of organization with the state, as well as file annual reports with the state as well. There's also other internal documents that you need compared to a sole proprietorship where you are the be-all, end-all. Depending how many members or managers you have in your LLC, you're definitely going to have some internal paperwork as well, just kind of outlining how the LLC operates. And again, this is kind of the common saying, measure twice, cut once. Formation and getting the foundation established early is very important, especially for an LLC. Like I said, filing an annual report, another extra step that you have to worry about every year. The cost of filing itself isn't expensive. I think it's $125. But if you miss that deadline, it gets very expensive very quickly. The state is very penal with its late fees. And like I said, more paperwork than a sole proprietorship. Generally, you're going to have an operating agreement outlining how the LLC operates. You might have individual membership agreements in between the individual members, how they handle disputes and stuff like that. So again, maybe a little bit more work up front, but in the long term, it usually pays off. Now we have corporations. Shareholders enjoy limited liability. If you're going to bring outside investors, maybe family is going to invest in your business, having a corporation is definitely a consideration. Allows them to invest in the company, be active, be members, but also they don't have to worry about, you messing up and doing something stupid where they are on the hook for it. And you don't have to worry about yourself being on the hook, so should something happen. Raising additional funds is possible through the sale of stock. Depending on how much capital you have to start the business, you might be looking to bring in outside investors, or maybe the business grows and is very successful and you want to bring it to the next level. It's very easy to do with a corporation. You can authorize more shares, issue more shares, get more cash in the business, and really grow it rather quickly and efficiently. Also, you can deduct the cost and benefits it provides to officers and employees. That's an additional tax consideration. Generally, salaries, operational expenses can be written off for business. Corporations, this makes it a little bit easier. Disadvantages: organizing is the most expensive and time-consuming business structure to form. I've seen a lot of companies start off as LLCs and then they decide to transition later to corporations. That's an expensive process, adds legal fees, and generally they're corporations that are tight on capital. So anything you can get out early, again, it's all about setting up and having the good foundation in place. You don't want to pay to set up an LLC, and then if you decide to go to a corporation later, it's just extra money you could have saved earlier on. High level of paperwork is needed as a corporation. You have to comply with federal, state, and local agencies. Again, you need to have your annual shareholders meetings, annual directors meetings, electing directors. Again, I've seen individuals who run corporations, and it's still important just to draft this paper trail, which, depending on how much time you want to commit to checking all the boxes, crossing T's, dotting I's, can be a little inconvenient and frustrating. Again, filing an annual report, just like an LLC, you have to file this. You also have to pay annual franchise taxes as well. And this depends on, there's, I think, two ways you can calculate annual franchise tax. One is based off the authorized number of shares outstanding. Another one is based off the assets of the corporation. If you don't know what you're doing when you're setting up your company or filing your annual franchise tax, it can get very expensive very quickly. Like I said, one way of calculating it is by the authorized share amount. And every once in a while we get people in who want 1 million shares of their company just because they think it sounds cool. And then come franchise tax time, they're paying, I think, 15 cents or something per authorized share times, I forget what the actual algorithm is, but it gets very expensive very quickly. Important to keep in mind when you're setting up your corporation. And then may result in higher overall taxes. Dividends paid to shareholders may be taxed twice. Again, like I was mentioning about the annual franchise tax, that can get expensive very quickly. And also, any gains your business gets taxed at the corporate level. And then generally, you might distribute this out as dividends to investors as well. That gets taxed again come dividend time for the individuals receiving them. And finally, partnerships. Advantages of a partnership: simple, inexpensive business structure to organize. Raising capital can be pretty easy with a partnership. Partners may have complementary skill sets to contribute to the business. Compared to a corporation or an LLC where you might have a single director or a single CEO, manager, maybe you're bringing in someone who is bringing the capital and you have the business expertise, and you want to divvy things up equally but have different roles within the company. Partnerships are a great way to do this in a flexible business entity style. And then reports profits and losses on the personal income tax returns. Again, unlike a corporation, they're not taxed at the partnership level, it's at the individual level. So anything you make from the business, you just report as income for yourself. Again, makes it pretty simple at tax time. Disadvantages of the partnership. Each partner is individually liable for the actions of other partners. This is a big surprise for some people because legally speaking, it's they will create partnerships whether or not you decided to create one. If you and your friend one day decide, oh, we should start a business together, we'll split profits, losses 50-50, and we'll just get into it. State of Illinois is going to say you guys form a partnership, whether or not you registered it with the state, whether or not you pitch yourselves as partnership or not, they're going to say you formed one, you're sharing profits and losses, partnership exists. And if your friend messes up, makes a bad decision, does something stupid, and he can't pay it, they're going to come to you to pay the bill at the end of the day. So if you want to form a partnership, or there's even a possibility of you forming a partnership, you want to make sure that gets hammered out early and you realize it and you have a partnership agreement in place to handle any unexpected happenings.
Does that also apply if it's a family member?
Yes. So yeah, I guess again, you wouldn't think so, but they are very broad in the definition of a partnership. So if you're the big thing is splitting profits and losses with another individual. So important to keep in mind. And then again, business may dissolve upon withdrawal or death of a partner. This, again, the importance of laying the proper foundation, having a partnership agreement in place that addresses what would happen if a partner withdraws, passes away, or becomes incapacitated. Very important if you want to keep it running after such event would happen. So a brief overview of procedures for formation and operation. Well, actually, before we go to that, does anyone have any questions about LLCs, sole proprietorships, partnerships, or corporations?
I was wondering a little bit about what you mentioned of how some people started maybe with an LLC and then tries to go with a corporation.
Mm-hmm.
And that will be extra money. But then it sounds like starting a corporation, it's more money up front.
Yes.
What would you recommend overall?
I can't recommend one either way. I guess it's depends on your situation, what you're thinking about starting. See, the benefit of an LLC is that it's incredibly flexible. You have the operating agreement at its base, which kind of says how the members and managers interact with each other, and you can get a pretty similar corporate structure to a corporation with an LLC. You don't have the advantages that having stock in the company offers. So normally when I see companies transition from LLCs to corporations, it's because of that stock aspect. They want the extra financial flexibility of being able to raise capital through stock issuance. And when you have that option, the financial constraints of either way kind of diminish a little bit because you're bringing in outside money usually. But there's not a lot of situations where someone first comes to me and says, oh, I want to set up this business with an LLC. And I go, oh no, you need to be a corporation. Like that's very rare, and I can't imagine many situations where that would be the case. And again, if you come in day one and LLC is the move on day one, and then 5 years down the line, the business has grown, it's very successful now, you want to bring outside money, form a corporation, I don't let a couple $100 stop you from doing that. Hindsight's 2020. I'm sure you would have wished you would set up a corporation on day one, but that's just not how things work sometimes. So again, it is a little extra money, but I wouldn't say that's weighs too heavily either way, depending on your circumstances.
If you form a single member LLC, how hard is it to add additional members later?
So that, again, it depends on how you set it up initially. If you have an operating agreement in place that considers adding additional members, Very easy process. If you don't have something in place, then you have to set something up in place when you add additional members, and there's just a lot of ambiguity there. So again, if you have an operating agreement in place, even a very standard one that contemplates someone joining the LLC later, not too big of a hurdle, very easy to do. Anything else, or? All right. So overview of procedures for formation and operation. Formation, again, first off, state registration. If you're filing a sole proprietorship, this may be an assumed name. You might have to register with the county you're in, depending on which county it is. Some of the changes between like McLean and Champaign are honestly shocking. The fact that it differentiates so much between the counties, but something to be aware of. If you're an LLC or a corporation, you file the articles of incorporation for a corporation, obviously, organization for an LLC, and then you may have to register your partnership as well. Then there's also other things depending on what kind of business you're operating. If it's a professional entity, like a law firm or doctor's office, anything like that, there's going to be other state requirements with the IDFPR, so you'll want to consider that as well. There's also IRS filings. SS4 is the biggest one. SS4 is for the Federal Employer Identification Number. No matter what entity you set up, you're generally going to have an SS4, even if it is a sole proprietorship, just because you want to keep track of how money is coming into the business, flowing out to you personally. And of all the filings, SS4 is incredibly simple. It's free. Takes you 15 minutes online on the IRS website. I know I'm probably not supposed to say this, but you don't need to hire an attorney to file an SS4. Very simple. Anybody can do it. And then you're also going to want to set up your internal or operational documents. For LLC, this is going to be your operating agreement. Corporation, it's going to be your bylaws. Corporation as well, depending on how many shareholders you have. It's going to be a shareholder agreement usually. Even if you only have 2 shareholders, probably a good idea to have a shareholder agreement in place. Then you're also going to have to think about transferring assets into the business entity. I've seen a lot, people buy property individual, they own it, and they want to set up an LLC down the line to manage, take care of all the property management things, stuff like that. They want it not to be in their name personally for whether that's probate reasons or liability reasons. Generally transfer assets into the business when you begin it. Operationally, as I previously mentioned, a lot of administrative requirements depending on what entity you set up. LLCs, you have annual reports. You might have, it's not required to have membership meetings or member meetings or membership votes. But generally, as we operate at Meyer Capel is, whenever we file your annual report, we generally do a resolution among the members, basically just confirming the basic requirements of the LLC. So we'll do naming the manager, naming the principal place of business, stuff like that. Not a big deal if you don't do one, but for the sake of continuity, having stuff on record, it's kind of important to have that the bigger the business entity gets. And then, as I've said, for corporations, have to file the annual report as well. You have franchise taxes. And then, unlike the LLC, it is required that you have officer elections, annual meetings for shareholders and directors. If it's just you, this is going to be done pretty simply, but depending on how many members you have, documents have to get sent out, people have to sign, people have to agree to things. It can get very frustrating, very time consuming, and sometimes very expensive, depending on how big it is. General tax overview, taxation, I've kind of mentioned this briefly. Sole proprietorship, it's not taxed. The IRS calls it a disregarded entity. So if you go on the IRS website, you file your SS4, you'll click the box for sole proprietorship, disregarded entity. It exists on their records, but they don't tax it. They tax you individually. LLC, not taxed at the entity level. Again, talking about the flexibility of an LLC. Sometimes if it's a single member, it's disregarded. If you bring in more members, it's a partnership. It gets taxed as one. So, but you do avoid the double taxation that comes with some corporations if you do an LLC. Corporation, it is taxed at the entity level generally. So I mentioned closed corporations earlier, and closed corporations are kind of a hybrid between LLCs and corporations, where they're not taxed at the entity level, and they're taxed. It basically operates like an LLC, like a partnership among the shareholders. So that has important tax considerations as well if you do switch the type of corporation you form. Self-employment tax, sole proprietorship, yes, you are the business is you. You have to pay tax on your self-employment. Other entities, no, unless you take a salary, which again is something you need to consider when you're setting up the business, is how do you want to receive money from it? I mean, everyone goes into business to make money. How you actually capitalize on that is going to depend on how you capitalize that is going to influence how you're taxed. So it's important to consider when you're forming. Double taxation, I mentioned this. Only corporations, that's normal corporations, not closed corporations or S corps. They're taxed a little differently. And you have the top end, the corporation reports its profits, it pays tax on that. When you distribute those profits among the shareholders, that gets taxed again. Tax forms should be aware of when you're starting these entities. Sole proprietorship, it's your standard 1040. We're all aware of that. We're all used to it. So nothing too dissimilar there. Corporations, 1120. And for an S corp, it's 1120S and possibly a K1, depending on how you do distributions. LLC, again, depends on the number of members. If you're a single member LLC, disregarded, it's just a 1040. If you have multiple members, you're making distributions, there's a 1065. You might be doing a K1 as well. Again, depending on how complex the entity is you're trying to form, you're probably bringing in accountants to provide outside tax advice, hiring a tax lawyer who's well-versed in the IRS code, and going from there. And then, any questions? I was hoping this would be more, kind of go a little more back and forth here. So I was hoping you guys have any questions. There's a lot of flexibility with business entities, and it really depends on what you want to do as a business owner, what your goals are, what kind of business you want to operate. So any questions you guys have, feel free to ask them. I'm an attorney. I do this every day for work. Set up 2 companies today for individuals. Feel free to ask any questions you have. And it's not legal advice, disclaimer. I'm not telling you what to do, but I'm free to answer any hypothetical questions you have about setting up a business.
Do nonprofits, are they in a totally different category?
Yes, there are. So yeah, you can do a nonprofit corporation, then there's low profit LLCs, and they have a bunch of different requirements. Distributions to shareholders for not-for-profit corporations is heavily watched. What happens when the business decides to wrap up is another big consideration. You can't distribute anything to any members. It usually has to go to another non-for-profit, or there's just a bunch of requirements come wrap-up time and setting up and how you distribute any profits from the company.
I have a question. Just kind of in a general idea, how do the different entities get taxed if there are other, if the entity works in
It is a good, so I can't say anything about the taxes in different countries. I'm not an international law attorney, so I don't know, can't say anything about how Belgium taxes foreign companies. But generally, if it's a foreign company and it operates in the US, you'll have to pay taxes on anything that is derived from the US. So,
But what about the opposite if it's a US company operating in another country?
so you'll pay, I'm assuming you'll pay taxes on whatever profits derived in the other country, and whatever profits derived in the US will be taxed by the US. So,
Because I know that, for example, for US citizens living abroad, even if you're making money abroad, you still get taxed as an individual.
yes, I think it depends on how you can get as minute as you want. More if you have very good accounting and you know to like the dollar of how much profit you're making, not only in different countries but different states as well. So Delaware is a big state for filing corporations. They have very robust corporate law and a lot of case law, so people like filing in Delaware. If you're a Delaware corporation and you operate in Illinois, you pay your annual franchise tax on any profits you make in Illinois, as well as you pay any taxes in Delaware on what you make in Delaware. So it really comes down to where's the money coming from and to what extent you are availing yourself to said jurisdiction. I don't know if that answered your question at all. It's,
No, it makes sense. Even like between states, that's
yeah. Yeah, good old federalism.
At what point is something, are you, I guess, an employee or a subcontractor or like somebody who does something like they sell on eBay or they do Uber, you know, at what point are you a business?
Yes, so I believe the test is to what extent said business has control over you and to what extent they can determine what you do, what your actions are. So for Uber, their big thing is it's your own schedule. You drive when you want. You pick up the passengers you want. You are an individual contractor. Now, if Uber came back to you and said, hey, no, you need to drive between 9 a.m. and 5 p.m. every day, and we'll pay you set salary, that you're breaching the territory of being an employee. Generally, businesses will vehemently try to restrict employment as much as possible. So, I mean, I've drafted consulting agreements where you have a nice big chunk of text in there saying you are operating as a contractor, you are not an employee, and to any extent that you think you're an employee, you are wrong. Like because you're trying to avoid the ambiguity of what are you a contractor, are you an employee, because then you have other tax considerations to bring in, you have employee benefits that might be tolling.
So the individual though that's doing the subcontracting,
Yes.
at what point do they have to declare themselves as a business? Do you know what I mean?
So, I mean, if you're operating as a sole proprietorship, and you're just like, again, if I'm Ryan Michaelson Uber Services, I'm a sole proprietorship. I'm not using an assumed name. I don't have to register. Any income I get from Uber, that's on my 1040. I'm operating as a contractor.
So you probably fall into that category until you do something else.
Yes. But then again, if I wanted to set up Ryan Michaelson Uber Services LLC, 7 LLC, do it that way, I can as well. It just, generally it shouldn't be too much of an issue. And if you think it is, it probably is. If it looks like a duck, walks like a duck, sounds like a duck, it's probably a duck, and you should set up a business. Basically all I can say about that. Again, I hope that answered your question, but I without specifics, I can't give too firm of advice.
Has tax coaching become a thing locally?
As what?
Has tax coaching become a thing locally?
Not, in what aspect? In what?
Okay, so if somebody has their accountant and they have a certain rate,
Mm-hmm.
and the person who has a business or a sole proprietor or is just an independent contractor says, I need advice on things to make these decisions, but it's an ongoing thing, I need more than one conversation, I pay you a certain rate for a specific amount of time, you're not my accountant, but you can give me advice, and when it comes time to file, I will either work directly with my accountant or I will work through you.
Yes. So I believe a number of firms in the area do offer tax coaching. I can't be.
It can be done anywhere.
Yes, and like, there's a lot of free nonprofits that offer tax coaching for businesses. I know. I think I wouldn't be surprised if the university has a program set up possibly for new businesses. I'm sure H&R Block and some of the big retail tax accounting places might not offer it, but I'm sure if you reached out to a local accounting firm, Martin Hood jumps off my head. I've worked with them a little bit in the past. They might offer tax coaching if you speak to them, explain your situation.
I'm sorry, what was the name?
Martin Hood.
Okay. There's nonprofits locally that do that?
Not that I know of. I don't know any names off the top of my head. I know that certain universities have like incubator programs set up for businesses, and I believe there's tax consulting as part of that.
What would happen if someone was to file, as an LLC, for example, in one state, and then they learn about Delaware or somewhere else, and they decide later that they would rather be filed in that state? What happens?
So you have to file some more documents with both states, pay a little extra money, but you can move your state of incorporation of organization pretty freely. It's not a huge hurdle. It's just a little bit more time, a little bit more money, but you can do it.
What about people that have assets as they age over time and start to get rid of what they own?
Mm-hmm.
How do they orient towards personal possessions versus on the verge of having a business where they're selling private items? I mean, they're not an auction house. They might work with auction houses.
Yes. So yeah, that's one of the disadvantages of having a sole proprietorship is that there's a lot of ambiguity there. I mean, your assets are more or less the business's assets. While if you have an LLC or a corporation, you can put those assets in that company's name and totally separate. Whatever happens to you, someone sues you, takes you for all you're worth, and you're left penniless, but the business has $10 million of assets in its name, they're not touching that at all. I mean, again, there's always hypotheticals and differences. You can pierce the corporate veil. That's a nice legalese term we have. Where basically, if you're running a business and you're intermingling assets, the company has a car in its name, but you use it for personal endeavors, you drive the kids to soccer practice in it, there is a possibility that someone who sues the company or someone who sues you would be able to get assets from the company as well, be able to reach that company car. So that's something to be aware of. That's more of a back-end issue of like how you run the business and to what extent you have the proper procedures in place to handle accounting problems, asset management, stuff like that. But also setting up the company properly in the beginning can go a long ways in protecting, differentiating assets and making sure there's a proper paper trail showing who owns which assets.
Do you ever work with artists that own art, that they are percentage-wise
Yes.
getting
I have not, no. If you feel comfortable telling a little bit more,
It's hypothetical.
oh yeah, of course.
But basically, take a look at artistic areas in the country, look at where they're located. What's going to happen to that over time, right? So if somebody decides, okay, there's a certain amount that somebody has on a coastal region, and there is, what would be the benefit of bringing it inland or to Illinois? You would want to, you would almost want to do that as a consulting thing, because honestly, there's so much variety there, and there's so many different independent sources of production when you're dealing with the artistic community. But if there is value, and if there is like years or decades of work or collections, there's got to be a way of orienting towards that, which you're basically going to be focusing on a lot of shipping. You're going to be focusing on climate control. You're going to be focusing on storage, and you're going to be basically working with accountants year round. If I move it here, what is the benefit tax wise? If I'm going to sell it, does it have to be based in a particular state?
Yes.
All that stuff.
So that's definitely an accountant question. I wish I'd give you a better answer, but the way, like, just like where the values,
We're asking that right now.
where the values like derived is a different question of where it's actually located again too. We're talking about new mediums for art.
Sure.
If you publish something in Illinois, but it's viewed all over the world, like that's going to have important tax implications come April. And as far as ownership goes, again, they're talking about art. Ownership rights are at the forefront of issues you want to consider. And again, it's just when the time comes when you're going to set up the business, that's just a factor you want to make sure that you bring up either personally with yourself and make sure you understand the complexities of the given situation, or if you're going to an expert, an accountant and an attorney probably. I can only think of how many complexities and how complex and just the enigma of art could be as far as, I mean, we're seeing it now with NFTs and stuff like that. The legal world's a little slow. So when it comes to adopting to new age media, new age art, definitely want to make sure you have all your ducks in a row with the current law as it stands before, as you reach out into new horizons and you explore different creative fields. That's the best advice I can give you on that.
How well do you know Illinois? Like, you've practiced in Illinois for a while. You know it as a state.
Yep.
Outside of Champaign, is Chicago a place to avoid in terms of navigating something like that? Like, if you were going to invite hundreds of people to move collections, would it make sense to get on the edge of Chicago and just come south?
I can't give you a firm answer, but what I will tell you is Chicago, Cook County, Champaign, we're central Illinois down here, like we're pretty lax on certain requirements and rules. Cook County, the fees are higher, filings and stuff like that, other requirements. It adds up quickly. Again, I don't know what kind of art collection you're talking about, but I know in like online media, states like Wyoming is cutting edge for NFT and digital art currency and stuff like that. So again, without further information, all I can say is that Chicago, Cook County in particular, they're going to have generally a higher standard, higher procedural roadblocks and bureaucracy you're going to have to follow through with. And again, if you're talking about bringing in hundreds of artists, get an attorney. Like, don't try to do it yourself. That's the best advice I can give. But generally speaking, more populous area, it's going to be more requirements, more red tape you're going to have to deal with.
So And is there anything else to keep in mind when dealing with family, distant relatives, or friends while doing that? Like literally, you gotta move it within a year.
Yes.
Who do you know? Let's call these people. And that's it.
So I will, word of wisdom when it comes to dealing with friends and family, that's one of the situations where it's almost even more important to have the proper procedures and operations in place, because again, knock on wood, hopefully nothing goes wrong, there's no disagreements, everyone behaves greatly, and there's no arguments at the end of the day. But the last thing you want to be doing is arguing with family and friends over dollars at the end of the day. And again, measuring twice, cutting once. If a friend, family member comes to you and says, hey, I thought I did this, I thought you owe me this much money, what are we doing here? And you having the ability to be, oh, you signed this operating agreement, this is what it says, this is how we deal with this situation, just becomes that much more important and doesn't burn any bridges, no hurt feelings at the end of the day. And that's, again, we're starting a business to make money, but also you don't want to tear apart families and friends over it either. It's a little bit of extra work up front pays dividends down the line.
We start a company trying to do very well, but if turns out that you need to dissolve it, or are there any responsibilities between LLC and a corporation? How easy would it be?
So again, generally speaking, LLC is going to be easier to dissolve than a corporation. You're going to have to make distributions probably if there's any assets left over. If you're not dissolving the corporation when it's broke, you're going to be distributing things to the members or shareholders. Generally, there's going to be more shareholders than members, generally speaking, compared to corporations to LLCs. But I mean, as far as state filings go, I think there's like the statement to dissolve an LLC is like $5 in Illinois, and it's like a couple lines on a form and you're good to go. So again, if you're doing a single member LLC, super easy to do. Like, it just depends on how many members, how many employees, stuff like that. But more or less, it's not a huge difficulty to dissolve a business entity when the time has come.
You mentioned a while ago that it's important to consider where creative work was published for tax purposes. Do you know if that depends on where the artist or the author, where their address is, or where they physically are when they?
You ask me all the tough questions now about art. I'm not an art attorney or an IP attorney, so I can't, nothing definitive on it. So, yeah, this is a constitutional law question called domicile versus, and it basically depends on where you avail yourself to the jurisdiction. So wherever you think you reside is more or less how the law determines where you reside. So I'll admit, I'm from Wisconsin originally. I still have a Wisconsin driver's license, but I live here in Illinois. I'm an Illinois resident. Just because I have an ID that says I'm Wisconsin doesn't mean I'm a Wisconsin resident. It's where I avail myself. This is where I live. This is where I work. So it's here. So if you have an apartment in Canada, but you spend 9 months here in Illinois, come tax time, they're going to say you live in Illinois. Anything else, or am I? No. Sounds good. Appreciate everyone coming out, and if you have any other further questions, or if you want to actually pay me to answer them, I'm Ron Michaelson, Meyer Capel. You can go on the firm's website and find me. Also, we have a bunch of other great attorneys, people who are much more familiar with IP and creative law or setting up foreign companies. And if we have full service law firms, so if there's anything you need or have any questions you want to reach out to us about, we'd be happy to answer them. But I appreciate everyone coming out and taking some time to hear about business formation. Thank you.
Thank you.